There are many types of assets that can generate income and wealth. Let's explore some income-producing assets that can help increase your cash flow and potentially lead to wealth. Here are the several options. Your assets generate enough income to cover your living expenses. You are not tied to a 9-to-5 job and can pursue what you are passionate about. Dividend stocks. These are shares of companies that pay regular cash dividends to their shareholders. Dividends are a way of sharing the profits of the company with the investors. These dividends can be reinvested to buy more shares or taken as regular income. Dividend stocks can provide a steady stream of income and also increase in value over time. Some examples of dividend stocks are Apple, Coca-Cola, and Johnson & Johnson. Money earned with little to no effort, often from investments like real estate, cash flowing assets, or businesses that don't require your daily involvement. Real estate is a powerful asset class that has made many people wealthy. Let's explore why it's considered a valuable avenue for building wealth. Real estate provides diversification in an investment portfolio. It's a tangible asset that does not always move in sync with the stock market. Having a mix of real estate and other investment can reduce overall risk. Rental properties generate passive income through rent payments. Owning multiple rental units can create a steady stream of cash flow, which contributes to wealth accumulation. Real estate tends to appreciate over time as property values increase. So does your net worth. Savvy investors buy properties in areas with the growth potential benefiting from rising prices. Real estate allows you to use leverage to acquire properties. When property values rise, your equity increase, even if you have only invested a portion of the purchase price. Real estate offers tax advantages such as deductions for mortgage interest, property taxes, and depreciation. These benefits can significantly impact your overall financial position. You have direct control over your real estate investments. You can improve properties, raise rent, and make strategic decisions to enhance value. Real estate is often considered an effective hedge against inflation. As prices rise, so do rental incomes and property values. Real estate is a long-term play. Over time. Rental income, appreciation, and mortgage paydown contribute to substantial wealth accumulation. Remember that successful real estate investing requires research, due diligence, and understanding local markets. Whether it's residential properties, commercial buildings, or land, real estate can be a powerful tool for building wealth over time. Business ownership, income, and capital appreciation. Business ownership. Starting a profitable business can be a significant source of income. Whether it's a small venture or a large enterprise, successful businesses can generate substantial cash flow. Owning a business can be one of the most rewarding ways to build wealth. Not only do you have the potential for income from the business operations, but you also stand to gain from the appreciation of the business as an asset. Whether it's a brick and mortar store or an online venture, the key is to build a business model that can operate successfully without your day-to-day involvement, thereby generating passive income. This is owning a part of all of a business that generates revenue and profits. Business ownership can provide active income from running the business and passive income from dividends or distributions. The examples of business ownership like franchises, intellectual property including patents, trademarks can be gold mine for passive income. This is creating or owning something that has value and can be licensed or sold to others. Intellectual property can provide royalties or fees from the use of your creation or invention. Some examples of intellectual property are books, music, patents, and software. The key is to create something unique and valuable. Bonds are generally considered less risky than stocks. Those who are looking for a more stable form of income, government and corporate bonds are the most common types, each with a risk and reward profile. Convertible bonds are hybrid financial instruments that blend features of both debit and equity. They are usually bonds or preferred shares that can be converted into common stock. Bondholders have the option to convert their bond holdings into equity at a predetermined course at the direction of the bondholder. Convertibles pay fixed interest payments like regular bonds. The option to convert to stock adds value for bondholders. Convertibles offer protection against significant losses compared to common stock. Some convertible bonds are callable, meaning the company can force investors to convert, which limits upside potential. Bonds can counterbalance the more volatile elements in your investment portfolio. Cash flowing assets are the epitome of passive income. These assets require little effort to maintain and generate a steady stream income. Include vending machine, laundromats, self-serve car washes, or website with ad revenue. The key is to find assets that have a high ratio of income to maintenance costs, ensuring a positive cash flow. The net amount of money moving in and out of your accounts. Positive cash flow means earning more than you are spending, which is critical for investment and personal finance. Saving accounts, while not the most existing interest-bearing, savings accounts provide a low-risk way to generate income. Consider online banks like CIT Bank, which offers different interest-bearing savings options with competitive rates. These accounts are suitable for short-term savings of your funds. Certifications of deposit CDs offer higher yields than regular savings accounts. Look for No Plenty CDs with shorter terms like the 11-month No Plenty CD from CIT Bank. They provide better interest rates while still allowing access to your funds. Commodities, gold and silver. Precious metals like gold and silver can act as a hedge against inflation and economic uncertainty. Their value tends to rise over time. Building an online presence such as e-commerce site. These are digital assets that can be monetized or sold online. Online assets can generate passive income through advertising, subscriptions, affiliate marketing, or product sale. Some examples of online assets are blogs, YouTube channels, and ebooks. Investing in the stock market offers the potential for both long-term capital growth. While the market can be volatile, a well-diversified portfolio of stocks can provide handsome returns. Over the long run, wealth can be built over the long term in the stock market through either an investing system or a stock trading system with an edge. Through the power of compounding capital gains, this is best done in a tax-deferred account to avoid taxes eating away at capital growth. Investing in the private companies can offer high returns, often higher than those from publicly traded stocks or bonds. However, the risk is also higher, and the investment is usually illiquid. Private equity can range from venture capital investments in startups to buyouts of established companies. Due diligence is crucial. Whereas the success of the investment often hinges on the management and business model of the company, private investments are not registered with the Securities and Exchange Commission. These are some of the assets that can make you rich and never work again. But they are not the only ones. There are many other ways to create and grow your wealth, such as investing in cryptocurrencies or art. Remember that diversification is key. Building a portfolio with a mix of these assets can help you achieve financial freedom, passive income, and positive cash flow. The key is to find the assets that suit your skills, interests, and align with your tolerance, financial goals, and time horizon. Press bell icon, subscribe channel, like video, share video with friends.